Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Friday, November 10th, 2017. Happy Friday everyone. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The previous session here, what we were looking for was this failed new high, and price was starting to test the edge here. And what I mentioned is if this is going to be a stop run day, you're likely going to see the midpoint of the day come into about 2580, and measurement wise that would take you to about 2564, 2565 half, somewhere in that zone. And we got as low as 2563 half. So we got right into that target zone. You can see the midpoint right past 2-day lows. It was a perfect projection down there. And from there, the market saw another buying opportunity right in the PIMA trigger zone, as we talked could be the case. That's exactly what happened the last time. And you saw it again happen this time. And we saw a pretty significant late day rally back toward the mid 2580s. Now price is holding kind of in the middle 50% of the previous session's price distribution, trading around that zone. Again, every pullback has been a buying opportunity, and we could continue to see price build out a little bit here before we see another rally to new highs perhaps. So right now, based off of this pivot low here, if we did see a rally perhaps to end the month here, we could see a run that puts us somewhere between these two green lines. And basically that would be up there 26.16 and as high as 26.35. So this would represent a 100% average range move. That would be a high probability 75% of range move. And so that's something to consider here later on in the month. Once we find proper absorption here, we could see another bounce right back into this zone here as we head into the end of November. Let's take a look here at the NQ. The NQ saw a similar move here yesterday. What we talked about again was from this failed new high that was 63.50 to the breakdown point here, which was 63. We talked that a 50% stop run day would put you into about 62.50. And we also had the FOMC key level from November 1st at 62.38. So that was the target zone we talked about yesterday morning in the pre-market report, was that if it turned into a stop run day, we could see a move into 62.38 to 62.50. I then mentioned that any pullback would likely be seen as a buying opportunity, even as low as this LVN and into this trigger zone. Didn't quite get that low just yet, but we did see buying come in off of our target zone, and subsequently price closed back above 6,300. Right now we have a narrow range inside day trading around the middle 50% of the previous session's range. Again, pullbacks have allowed bulls to come back in, defend at lower prices, and subsequently rotate this thing back to new highs. So again, we could be looking at more strength ahead, but first we could see a little bit of absorption ahead of the next rally. Now taking a look here at crude oil. Crude oil has been very, very interesting here lately. The volatility has clearly picked up, unlike anything we've seen in quite a while. The intraday swings have been very volatile. Even on a day like yesterday, that was an inside day, there was volatile swings back and forth. That was the case a couple of days ago as well. Right now we're seeing a double inside day here, and that can be a very tightly compressed, coiled up pattern that suggests that we could see expansion soon. As I usually say, if this pattern continues to develop this way, you could see a failed breakdown in one direction and a reversal and breakout in the opposite direction. So one thing to watch here is that after this recent rotation and push through 55s, any counter move into that zone could be a big time buying opportunity for a run to 60. So again, if this thing were to break down, we could see buyers step in, defend, and rotate this thing back to new highs. So keep an eye on that setup here. So right now, very tightly coiled pattern. So you got to be careful right now, as the compression here can lead to whipsaws. Taking a look here at gold for a moment. Right here, gold continues to test that 1285 edge and really can't get away from it. We had a VPOC shift down of about 1 point, and that put us right here into 1288.30. So right now, 1288.30 is composite VPOC, and what we're seeing right now is just price hold in that zone. I talked about it from the very beginning that this could be a kind of like a ball getting stuck in mud. It's not going to bounce. It's just going to get stuck there. And so far, price is stuck right around this price zone, and we haven't really seen any swing move away. So again, we had a really good sense that that could be the case. But after you build out and mature over the course of a month now at these lows, we could see expansion sooner than later. And again, given how this thing has been rounding off on the bottom, I would lean toward an upside push at some point. But again, we got to see which way this market takes it. And right now, again, patience is key. All right, that's it for now. Let's see how these things play out heading into the rest of the session. Good luck, trade well, and happy Friday.